We receive DoorDash food a couple of times a week, and I just can't tell you how convenient it is to just think of what you want to eat and then Shazam, within a half hour, you have the food that you wanted at your doorstep. DoorDash has just exploded, especially during COVID. A number of deliveries just went through the roof. In this video, I'm going to be analyzing DoorDash and their stock to see if it's a really good buy or if it's not a good buy. My name is Victor. I have an MBA. I have a lot of business experience, and I like using that experience in my education and analyzing companies that I look to invest in. In this case, I'm going to be looking at DoorDash. Do me a big favor and like my video. Also, subscribe to my channel if you want to see videos like this. Let me tell you more about DoorDash. I follow a process on all the stocks that I invest, and I like that process to be consistent. That way, I really scorecard my investments and make a decision whether I should buy more shares, hold, or sell my shares. My process involves 4 questions, followed by a decision whether to buy, hold, or sell. The first question, do I want to be part owner in the company? Do I really like the industry? Is the company operated and performing well? Is debt under control? And am I getting a discount on that stock? Based on the answers to those questions, I buy, hold, or sell a particular stock. So modern times have really supported the DoorDash model. The DoorDash model is delivering of food and other items now. The gig economy supports it. There's people that either want to earn a little money on the side from their current job, or maybe they do something like they're a student or they're a homemaker and they want a gig so they can do something to create some income. The long story short, really this connected world that we have of everybody having a mobile phone, everybody being connected on the internet, has enabled DoorDash to have this business really thrive. So the story of DoorDash, it's a young company. They're really in an industry that continues to grow, and people really like their service. DoorDash announced their earnings this past week, and they've showed really good growth. Looking at their income statement, they grew about 30%, which is excellent. They are unprofitable. It's a high growth company, so they're still working on being profitable, but their growth is really good. One thing that's a ding against DoorDash is they continue to issue out more shares, and the more shares that they are makes each share less valuable. So that's a bad thing. Hopefully they get under control. They kind of keep their share count stable, and at some point begin to reduce it. What's working for DoorDash is they are the leader in delivery. So they really focused on that and have the greatest market share for delivery. So that focus, I think, is what's working for them. The experience on the customer side is very positive. And I believe the experience for the gig worker, the delivery person, is also very good. With regard to the balance sheet, they don't have any debt. So that's really a good place to be. They have over $3.5 billion of cash on their balance sheet and no debt. Their free cash flows really increased. DoorDash had free cash flow in 2022, but looking at 2023, their free cash flows exceeded 9 times. So that's just incredible growth in free cash flow. It goes to show that the DoorDash business model, all their infrastructure, all those things they have to set up are set up. They don't have to invest much more in the business. They could just really harvest a lot of revenue, a lot of free cash from the business. I believe that DoorDash is currently discounted 56%, meaning that I believe each share is really worth $130.13 based on a free cash flow value. And they're being sold in the open market for $83.60. Let me show you how I got to that point. I'm going to value DoorDash using the discounted cash flow model. And that the starting point for my first year of cash flow that I expect, free cash flow, is going to be basically their first 6-month run rate, which was $724 million of free cash that they produced in the first 6 months of 2023, times 2. And that gives us a run rate of $1.4 billion of free cash flow. I'm going to grow cash flows over years 2 through 4 at 20%. I think that's a conservative number. They're growing very dynamically in that area. And then long-term growth at 6%. All cash flows beyond year 4 are $66 billion. So collectively, all these cash flows, I'm going to discount at a nice high weighted average cost of capital of 10%. It gives me a current value of all those cash flows at $47 billion. I add the cash on the balance sheet. They don't have any debt. So I think the equity value of the company is $50.7 billion. The market cap currently is 32.4 billion. So it offers up a nice 56% discount on DoorDash using the discounted free cash flow method. Coming back to my scorecard, do I want to be a part owner in the company? Absolutely. I think this is a growing business. It's a norm in our society to have a lot of food delivery. It actually helps you be more healthy. I realize that, hey, I could order healthy meals and have them delivered. They're nice, hot, fresh, and delicious. And I think the management team here, the focus is really working for them. The focus on delivery really works for DoorDash. The company management team, as mentioned, is doing a great job. Debt is at 0, so that's fine. And then a discount is available on the stock. Therefore, I'm looking to buy shares in DoorDash. I currently don't own any DoorDash, but it is a recommendation I received from somebody. And I analyzed the company, realized that, hey, this is a company worth taking a look at to buy shares. Looking at where the stock price has been over the last 5 years is quite interesting. In the pandemic era, they were just flying high above $200 per share. Now they're trading at $83.60. My valuation of the company is that I believe they're worth $130 per share based on the free cash flow method. So you can see that there's a really nice gap of value here. That as a value investor, I'm interested in investing if you're going to give me this kind of value. The stock has risen in the year-to-date time frame, up 73% year-to-date, but it has dropped recently down to $83.60. So looking at this differential, I think it's a good opportunity to start buying into shares, and I'm going to average in my investment, buying maybe a certain number of shares every week or so, and looking for down days when the stock market's down. We are kind of in a pullback in the market. This past week, the S&P was down well over 2%, closer to 3%. So if we have pullbacks like that, it'd be a really good idea to add DoorDash shares to my portfolio. And that's my video on DoorDash. I hope you found it interesting. Do me a big favor and like the video. Consider subscribing to my channel if you like videos like this. Thanks for watching. Good luck investing in 2023.